So Vijay sir, you can start.
Shall we start?
Yes.
Good evening, members, and welcome to the 19th VCM of our study circle, Borivali Central CP Study Circle. Before we start the session, let us raise for our institute motto with our code of conduct for the month of September.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता
Welcome back, members. Today, we'll be having a session on ITR forms. As you know that the return filing season has begun. Most of them have got the Form 16. Bank has started updating the passbooks, or started giving the bank statement. Now it's time that we sit and compile, prepare the computation of income and file the returns in a smooth manner. But this is not so, because when you go for e-filing, the forms get changed often. What are the amendments in the form? You don't know unless and until your friends calls you and tell you and ask you where to put this in the particular sheet. Then you will wonder, अरे ऐसा भी कुछ change हुआ क्या? So lot of changes are happening in the income tax forms, and you should be, as a chartered accountant, we should always be updated with the latest changes in the forms. For that, we have today an eminent speaker, CA Avinash Ravani, who will be dealing with the topic. Now I request Ravi Soni, our committee member, to briefly introduce him.
Thank you, Vijay sir. It is my immense pleasure to introduce today's our learned speaker, CA Avinash Ravani. CA Avinash Ravani is a BCom FCA DISA. He is a partner of Ravani and Company since 1993. He is a member of various study circle and study group of WIRC ICI. He has delivered more than 500 lectures at various forums, at various study circle, WIRC, SIRC, ICI. He is a visiting faculty for Corporate House, Bombay Chambers, IIM. His contribution various articles to various study circle. He is a core team member of ICI in handling e-filing help on issue on uploading, filing of various e-tax audit report and e-tax return mandate under the various provision of income tax. He is a special invited member of the Direct Tax Committee of ICA for the year 2018. Presently member of study group of Direct Tax SAB and CLG Committee of ICI. Member of Law and Representation Committee of Chamber of Tax Consultant. He is a co-author of the books on French benefit tax published by Malad Chamber of Tax Consultant in year 2009. He is a technical guide on ITR form published by Direct Tax Committee ICA in 2018. He is a co-author of Guidance Note of Revised Tax Audit Report notified in 2018 published by Direct Tax Committee of ICI. With this brief introduction, I request CA Vijay Jayam, to present him the slip of the 500 rupees of donated on behalf of CA Avinash Ravani.
Avinash Bhai, on behalf of Borivali Central CP Study Circle, we present you a CABF donation of 500 rupees as a speaker contribution to the fund. Now I request yourself to start the session.
Okay. Thank you, Ravi, for the kind and introduction. Vijay, Nilesh, and all other team members of Borivali Central Study Circle, being a home study circle. So I think I should not find any such issues in dealing with today's topic. Today's topic we have divided into basically 3 parts. First is we are taking about the key changes and amendments which are there in the income tax returns. Then about whatever the notifications which have come, which have mandated the changing of information under the income tax returns. And last but not least, but what are the further amendments? What are the further changes which are expected on the CPC website? So starting topic per se, basically we should start with some data that we have almost around 134 crore population in India, and out of which 122 crore people are holding Aadhaar cards, and PAN is allotted to 43.52 crores population, and out of which 43.52 crore population, 9.33 crore people are registered on the income tax portal, out of which individual returns filers are almost around 6.44 crores, and 60% return filers are ITR 1 and ITR 4, that is basically related to presumptive taxation, and 35 crores people are covered by insurance in our country. Unique, mutual fund investors are around 2 crores, and bank account holders are 75 crores. So see, this is the basically picture of our statistical information presented by the government. And if you see the last on 12th of August 2020, when our Prime Minister had given the speech, wherein stated that almost around 57% returns are filers which are below 2.5 lakhs. So whenever the income tax limits increases, the return filer increases to that, the income of the person automatically gets increased to that extent. So this is the area. As you see, almost around 65% returns are being filed. Means the government is not getting any revenue because there is, as present, if you see up to 5 lakhs, there is nil rate of tax. And people filers are almost around 75% people filers are not even contributing single amount to the income tax department to the revenue. And 1% filers are there, that is who are filing refund income tax returns above 50 lakhs. And last release where the data was released, almost around 20,333 people are covered by these returns, wherein they contribute roughly around 12,000 crores to the government. So this is the statistical information. Government has this time made it mandatory that some or other way the return filers should be increased, and that one of the reason here is that regular the changes in the forms are happening. So basically, government came up with a surgical strike on tax evasion. That surgical strike on tax evasion by limiting certain types of deductions, certain types of filings mandatory. Will cover that in detail. Then one of the reason where this filing was this tax evasion was there, that is ghost companies and ghost directors and shell companies, which were the most major area where the tax evasion was happening. So last year, if you see, almost around 3 lakh companies were being closed, and now this cases are being handed over to the enforcement department to find out the directors which are connected with this type of companies. And it has been found out in many cases that the directors were the employees of the company who don't know even to read and write. So these type of things have been identified to come to the notice to the government. Then one area wherein the tax planning or the tax evasion is being done is investment which is there in the unlisted companies. And this year, if you see in the return, there are major changes right in the income tax return also, as well as from the NCA point of view, because in the NCA now it has been mandated that all the unlisted companies, that is unlisted public companies, they have to get the share dematerialized, so that there cannot be backdated transfer or any such transactions or unscrupulous transactions which may happen. So these data will be automatically rechecked and verified with the NCA authorities. And now each and every department is linked with the income tax portal. So you have to be very careful while filing the returns of income. Then about the genuine taxpayers of the country, that is salaried individuals, they are claiming certain deductions based on without any such spendings, and for them also there are certain restrictions which have been enabled in the return to ensure that no such type of tax evasion is being happening. And one such area was that is last year that TDS returns, that is form number 24Q, was amended, wherein it is required to capture all the information which is required to be mandatorily given in the income tax returns, so that all the information at the time of presenting the form 16, the details are mentioned, all the details or all type of income which the person has received is being captured in that return, in that TDS return, and the tax is being paid, deducted and deposited well before the time. Then one of the purpose, also one of the area where the revenue leakages has been identified in case of capital gains and immovable property. This has also been dealt with in the ITR, in the changes which happened in the ITR. Then India has signed a treaty, and almost all the countries are covered, wherein there is an exchange of information across the globe. That is, all the resident individuals who are holding any foreign assets or any foreign investments in the foreign countries, so they are required to report in the income tax return itself. And this information will be cross-verified with the information which will be shared by the other country. And similar way, the non-residents information also will be shared with their country. So this is also one of the areas of those who have not mentioned these details or information in the income tax return. They have started getting the notices for non-filing of return or non-disclosure of information. And you see that basically when this scheme, then this was made mandated, the reason for the reopening can be done up to 15 years in such cases where these assets have been identified. So be very particular, be very specifically in case of resident individuals, wherein this information is required to be given. So take the declaration for that declaration at the time of filing the return, so that tomorrow the person should not come to you that I have given you the information and they will not disclose in the returns. And all these reasons are the basic, the government's intention is to increase the tax base and so that the revenue collections can be boosted and the tax rates can be brought down. This is the main purpose of the government. Now coming to the highlights, that is the ITR per se. You see the forms has been notified on May 29, 2020, and there is no change in the number of funds. But there are three major changes which has happened this year.
Avinash bhai,
Yeah.
can you share your screen?
Screen is gone.
No, it's not at all shared only.
Okay, I have already shared the screen. 1 minute.
You just share it again.
Is it okay now?
Yeah, now it's okay.
Okay. So this year one major change has happened that now the person, if he wants to file the return based on the Aadhaar number, so Aadhaar returns can be filed through Aadhaar number also. PAN is not required. So what it is stated in, and this basically is applicable only to the individuals, not to other than individuals. So only ITR 1 to ITR 4 can be filed. But at present, if you see anybody who wants to file the ITR with Aadhaar, there is no such option which is available on the income tax website. Then how we can file with the Aadhaar. Now let us see what CPC 2.0 brings it, whether it enables it or not. But one major changes has happened here, that the person who has the Aadhaar but he doesn't hold the PAN. Then if he doesn't hold the PAN, immediately the Aadhaar can, if the Aadhaar is linked with the mobile number, the PAN number can be generated online within 30 seconds. So that is the one option which is there. So those who want to file the return and those who have the Aadhaar, even they don't have the they don't have the PAN number, but they want to get the PAN allotted, they can also do the this PAN can be obtained online without free of cost. So that is one bigger change which has happened. Then mandatory filing of returns has been mandated. That is in case of deposit. Basically, it is not a cash deposit. It is to be read as deposit. Cash word is incorrectly come here. So that is deposit. So that will be covering in the next few slides. That is foreign travel, electricity expenses. Then about the time limit for claiming the exemptions, that is due to COVID-19, those who have those who failed to make the investments within that specified due date of 31st of the time limit was extended subsequently twice, and the last date was 31st of July 2020. So those who have already made the investment within that extended period, so they also have to inform that in the return of income. Except ITR 6, all the ITR utilities are released, so you can use and file, you can file the returns of income using this, any of these utilities. Then due dates, everybody is aware of now, that is 30th of November is due date for all the assesses as of now, unless and until it gets extended subsequently. But for the tax audit, the last date is 31st of October. That is, all tax audit reports has to be filed by 31st of October. So 1 month time limit has been given to file the returns, which of that audit report has to be filed earlier, and the returns can be filed subsequently up to 30th of November. And one more changes which has happened, that this year the department has come up that all pre-fill utility will be provided from where the information has been captured. So one of the reason here is that keeping two different due dates is that whatever the tax auditor has made the qualifications or any disallowance in the tax audit report, which will be automatically captured in the ITR itself, so that that fields will be filled up automatically. So this is one of the reasons. And second, all the details which are available in Form 26A will be automatically captured based on the information which is there. These are the changes in the current. Now coming to the exemption, that is only one category of person is exempted this year. All others have to file the returns online. That is super senior citizens who are of individual, that is 80 years or more, are called as super senior citizens. But they should not have any business or income from business or profit or gains of business or profit. That is one question may come here, that if a person is a partner in a firm and is getting only a share of profit, which is also exempt, then whether he is exempted from filing. According to me, it is no, because he has to use that ITR 3, because ITR 3 is mandated, and ITR 3 is mandated for e-filing. And e-filing, you cannot use this because even if he is receiving a share of profit, though it is exempt, he is a partner in the firm that forms a part of profit and gains of business, and though it forms under the exempted category. So it is voluntary for them. So if the person wants to file the return online, he can definitely file, but this option is available to them. Now, this is the specific, one I got a good picture. Just I wanted to share it with you all. That is this year's new form, people may try to lose the temper because now you have to capture, get lots and lots of information from the clients. And if the clients don't submit you the information correctly, then you will be at a problem. So it is better that you obtain all the information in writing and keep them on the record. And basically, when the computations etc. prepared, when the written is prepared, try to obtain the signature and keep it on records so that in future if something happens that some information is not disclosed and that the query comes or any at the time of scrutiny if any information is found out, so that you cannot be held responsible for not filing of non-submission of or non-filing of correct return of income. Now coming to the returns per se, everybody is aware that what return has to be filed and which has to be filed. Only there are two changes in the ITR. I'm not going to cover much in detail because I have lots of things to discuss with you. And secondly, this only the changes which has happened because who is required to file ITR, who are not required to file ITR, one ITR, etc. Everybody knows it. Only two changes which has happened this year, that is till last year, that is those who are having income that is below 50 lakhs. Either they were covered by presumptive taxation or they were covered by ITR 1. If they had only one house property, but that house property was held in the joint name, then they were not able to use that ITR because they had to shift their ITR because this was not eligible. They were not eligible to file this return. But now that changes has happened. So even if a person who is having even one house property, the income is below 50 lakhs and all, and they are joint holders, then they can use this ITR 1 and ITR 4 provided you are covered by this. Then second change which has happened in ITR 4 is that salaried incomes were also not, people where salaried income was not allowed to, the person who had income from salary as well as income from business or profit, that is presumptive business, then they were not allowed to file this ITR 4. But now that salary has been removed from this, so even the salaried person who is having this declaring the income on presumptive basis can use ITR 4. So these are the only changes which has happened. And one more changes which has happened in ITR 7, that political parties, they have to file the return with the digital signature mandatorily. But other persons who are filing eligible to file ITR 7, they can do the complete the e-verification process through other modes of e-verification. These are the basic changes in the ITR. Then Finance Act 2019 had introduced that mandatory filing of certain classes of the people. That is the person who has done the transaction, that is deposit transaction, current accounts exceeding rupees 1 crore. That is all aggregate of all current account. If it's exceed 1 crore rupees, then he is required to file the return mandatorily. Even these persons may not be having taxable income. That is, the income may be below taxable limit, but they are required to file mandatory this return if any of these three criteria is satisfied. That is the person who has spent the money on the foreign travel, which is in aggregate of rupees 2 lakhs for during. So even if he has taken a 2 or 3 foreign tours and aggregate expenses exceed rupees 2 lakhs, then he is liable to file the return. Expenditure on current consumption of electricity in aggregate of rupees 1 lakh or more. Now, three things here I want to say is that those who are regular filers, that is those who have taxable income, and those who are regular filers, they are not covered by this law, so they should not worry about this. Second thing, a person who was voluntarily filing the return of income till last year, though he had the income which was below the taxable limit, but he was filing the return because he was filing the return for his own convenience. But now, if suppose if he has undertaken any such transaction, if he has done any such transaction, then he is required to mandatorily file the return, even if though he doesn't have that income which is below the taxable, if the income is below the taxable limit. So here you have to select if this person is mandatorily required to file the return of income because of he satisfies this criteria, then you have to select over this, that is covered by 7 clause and is required to file the return of income. Then one question may come that a person who has spent the money. Now the person may actually have not traveled. So whether the person who has traveled, he is required to file the return, or the person who has spent the money is required to file the return. So here, according to what it says, that the provision says that the person who has incurred any expenditure. So if a person has incurred expenditure, he has spent the money. For example, now I have spent the money and I have not traveled, but my family has traveled. My son or my wife has traveled, and I have spent the money on behalf of them, and means they are also income tax returns filers, but their income is below the taxable limit. So whether they have to report, so according to me, it is not required to report because they have not spent the money. But since the person who has spent the money, he has spent the money, he is required to file the return. And subsequently, suppose if a person has spent the money and the money has been recovered subsequently from that person, means that is just, it was a transactional arrangement that the person who pays the money and then subsequently he recovers the money. So once that person who has traveled, he pays the money at that time, person who has paid the money, then he is required to file the return. So this basically, this is what I wanted to share. One thing here you have to remember that if a person has spent the money, he is not traveled. Unless he is spend the money for the family members, the person who has traveled will be in the radar to for the cross verification and such for cross verification. It should be very specifically and particularly decided based on the information which is required to be given. Then ITR 3, ITR 5, and ITR 6, wherein the tax audits are covered. That is, tax auditor has to mention the information. So now, if a tax auditor decides that instead of PAN number, he wants to give the Aadhaar number, he can give the Aadhaar number. So wherever the PAN number requirement was there in the ITR, that has been replaced, means that has been interchanged with the Aadhaar. So either the person can give the PAN number or he can give the Aadhaar number. So the tax auditor can now give the Aadhaar number, his Aadhaar number instead of PAN number. So he decides. Then second category, what has happened that now if you are covered by, if you are the tax, there is a slight changes in the tax audit limits. That is in Finance Act 2020, which was made effective from 1st April 2020 onwards. That's been changed in the tax audit limit. Now it says that there are certain definition changes also. That is 44AB and 44AD. 44AD is related to specified businesses and 44AD is related to profession. And in profession, certain category of persons are now being included, wherein the persons who are in the film industry, that is basically the film artists, whether by way of the actor, cameraman, director, music director, art director, etc. And such type of people who are associated and who are serving as in a professional capacity, they are now covered within the definition of 44ADA, and they have to report the profit at the rate of 50% if their gross receipt, 50% of the gross receipt if their gross receipt is less than 50 lakhs, and if they don't report that much profit, then they will be required to get their accounts audited. So this is just the who are covered under what type of category. This slide has been shared by Sharad Bhai, our core committee group member. So I am thankful to him for sharing this slide for him to me. Then coming to tax audit applicability, when the tax audit will be applicable. So first, that all SSCs who are having the turnover exceeding ₹5 crore, they are mandatorily required to get their accounts audited. So this is clear. Now, if the person is having the cash turnover up to 1 crore, that is cash receipts at turnover up to 1 crore, 5 crore, then you have to see that whether that person's cash receipts and cash payments are less than 5%. So basically, it says that aggregate receipts or aggregate payments should be less than 5%. So if it is less than 5%, then you are not covered by that. SSC is not covered by the tax audit. Now, what is the aggregate tax receipt? Aggregate tax receipt, it says that capital contribution, all income, sale of assets, loan taken or loan which was given previously, which has been received there. So if these all are covered as an aggregate receipt, so you have to just do one thing. What is your turnover? If the turnover is suppose 4.5 crore, 4 crore, so 5% of that comes to 20 lakhs. All right. So if your aggregate receipts or aggregate payments, if it is less than 20 lakhs rupees, then you are out of that SSA is out of the tax audit. And in payments also, in case that includes drawings, all expenses payments, purchase of assets, loans repaid or loans given. So this is also covered. In short, what is that you have to see the receipt side of the cash book and payment side of the cash book and remove the transactions which are withdrawal from the bank or deposit in the bank. So that if it is removed, withdrawal and deposit is removed, and whatever is pending, that will be your aggregate cash receipts and aggregate cash payment. And accordingly, if it is below 5%, tax audit is not applicable. Then you come to other criteria. That is whether it is a company or LLP or it is an individual HUF or partnership firm. So in case of company and LLP, if the turnover is less than 1 crore, then audit is not applicable. If turnover is less than 1 crore, then audit is not applicable. If turnover is more than 1 crore, if it doesn't fulfill that criteria, then audit will be applicable. Then in case of individual HFC and partnership, if the turnover is less than 2 crores, that is basically they are covered by 44 AD. So 44 AD, if they are covered by 44 AD, then they have to report the profit at the rate of 6% in case of digital transaction and 8% in case of cash receipt. So if they are reporting the profit at that percentage, then they are not liable for tax audit, and if they don't report that much profit, then they are liable for tax audit. I think this entire presentation will give you more clarity. And all this criteria is not applicable for tax audit for the professionals. For professionals, there is only one criteria, that is turnover below 50 lakhs. Then report the profit at the 50% of the gross receipt, at the rate of 50% of the gross receipt, or get the tax audit done. And if it is more than 50 lakhs, then mandatory tax audit. Then minor changes which are made in the ITR, that is ITR 1 and 2 did not have the nature of employment is required to be given, because based on the nature of employment, the other deductions which are applicable to that person, that is if it is a central government, and then they are eligible for certain type of deductions or exemptions. So you have to select, while selecting the nature of employment, you have to select which category that person belongs to, whether it is a central government, public sector undertaking, pension, or etc. And not applicable was not there, because family pension, what it is, though it is a family pension, now it is chargeable under the head salary. So that not applicable was not there, so not applicable has been added. This is just a minor presentation change. Then in case of house property, income from house property, if a person who has rented out, any person, that is in all ITL, if a person has rented out the house to an individual, then in the name of the tenant, the PAN number or the Aadhaar card number has to be given, because Aadhaar card number has to be given over here. And basically this is at now it is 1 lakh rupees is mandatory. So the person may not be having the PAN, so the person may be hesitant to give you the PAN number, but Aadhaar number is definitely available. So Aadhaar number can also be given. So either this is mandatory. Without this, if you don't fill up this field, then the ITR or XML won't get validated and you will not be able to file the return. In capital gains, there are two changes. That is basically what has happened in case of long-term capital gains. Now in long-term capital gains, everybody is aware that 10% tax has to be paid. Income tax has to be paid at the rate of 10% on the long-term capital gains. But now there has been additional information which has to be reported in the capital gain schedule. That is, for resident individuals, the income is chargeable under section 112A, whereas in case of foreign non-resident individuals, the income is chargeable under section 115A. So based on the status of the SEC, you have to select whether that which schedule will be available. Information is required to be given is same in both the schedules. So based on the resident or non-resident, you have to identify it and you have to select the correct schedule. Now, what is mandatorily required? You have to fill up these 14 columns are required to be mandatorily filled up. That is in first 14 columns. First it is ISIN code. So when you are selling, when there is a sale of equity shares or of a company or a unit of a equity oriented fund or a business trust in which STP has been paid, because that 10% tax is applicable only if the STP is paid. If the STP is not paid, then you are not liable for that 10%. That will be chargeable at the applicable rate of 20% or whatever may be there. So ISIN code number is mandatory. Name of the share of the unit has to be given. Number of shares, that is what it has to. Basically, it is the replica of the contract note which the broker issues to you. So that full information is required to be given. The number of shares or number of units, then sale price per share. That is sale price, that is gross sale price you have to give, and full value of consideration will be automatically computed. Then cost of acquisition has to be given, that is cost of acquisition without indexation. So if it was a long-term capital gains, then a cost without indexation has to be given. Then a cost of acquisition with indexation also has to be given. And if the shares has been purchased prior to 1st February 2018, then fair market value, what was the fair market value on January 1st, 2018, that has to be given. Accordingly, your total cost will be computed, that is which cost has to be taken. That is, it will be the higher of your cost or higher of the fair market value. Your column number 11 will be computed automatically. and whatever the expenditure which has been spent on this sale transaction, that is basically related to your brokerage, your STP, etc., will have to be mentioned in column number 12, and total deduction will be computed. And from the total, your total sale price, the total deduction will be computed, and whatever the balance will be there, that will be treated as a long-term capital gains or long capital loss, which has to be reported. So basically, this same information is to be required to be given. So if you don't mention the ISIN code number, either the return is not going to get validated. Now, how to get this ISIN code number? You can just visit the NSE website, or in case of mutual fund, or it is there, when you ask for the mutual fund statement with your broker, the ISIN code number is already available in that statement also. So if those who are having a numerous transaction in such a category, will have to be extra cautious and to see that the information is captured, given correctly, because this information will be cross verified with the details which are submitted by the broker at the time of sale of shares. So if there is any mismatch between this, then definitely the case may be come up for scrutiny or other purposes. Then when there is the sale of property which is happening, that is in case of capital gains on sale of property, the PAN number or the Aadhaar number of the purchaser has to be given. That is mandatory. So suppose if there are two purchasers, and each of the person's share is 50% or 75% or 25%. So aggregate of all these persons percentage share should add up to 100%. So if it doesn't add up to 100%, the return won't get validated. So PAN number, if the person is not having the number, Aadhaar number can also be given. So without PAN and without Aadhaar, the return is not going to be validated. It is just to cross check whether that person has filed the return or not, because many huge value property transactions were happening, wherein the persons were hesitating to give the PAN number or the Aadhaar number to avoid the taxes. So this is just to cross verify whether that person has reported this, declared this is a regular return filer or not. The name of the buyer has to be given, PAN or Aadhaar number, percentage share, amount of purchase consideration pertaining to that person has to be given, and all this total purchase consideration of all the persons should add up to that amount. And address of the property, which is address of the property is to be given, and PIN code number is required to be given. So this is mandatory. Then one more changes which happened this year, that is on August 23rd, 2019, 15% additional depreciation was granted. That is 15% additional depreciation was granted those who purchased the vehicle from 23rd of August till 31st of March 2020 and have put to use. Now, if you see in case of commercial property, commercial vehicle hirer, they are eligible for a higher rate of depreciation of 30%, and 15% additional works out to 45%. So that schedule for 45% was not there. So that schedule has been added in depreciation schedule DPM, that is this is related to DPM. So whenever the claim is to be made in case of such type of person, ensure that you select the block of 45% and mention the figure over there. Then secondly, the 43B section was amended, wherein clause DA has been added, that any interest provision which has been made, which is payable to NBFC and which is not paid on or before the due date of filing of return on income, they also will be disallowed, and that will be covered in the covered for disallowance. And one basic mistake which is happening each year, that people are what they are doing it, that they are clubbing all the expenses which are disallowable under 43 and mentioning in one single clause. Now, one thing what is happening here is that these information are cross verified with this tax audit is applicable, then it is cross checked with the tax audit, and whatever the tax auditor has disallowance has been mentioned, and if it is not mentioned here in the particular clause correctly, then it just adds up both the amounts and the computation as this processing is being done, and the notices of demands are being generated. So just this year you will be very specific and be very particular that you provide the information correctly in the correct clause, so that you don't get such type of processing defaults and additional demands. Then schedule DI investment is all ITRs, it is mandatory. That is those who have made the investment. That is whether they have made the investments during the prior period, the previous year ended 31st March 2020, or subsequently within that extended period of 31st July 2020. So if they have made the investment subsequently within that period, they have to mention in the column number 3, which is there in the ITR, so that these allowances will be whatever the investment has been made, then that will be allowed to do. That is under Part B of Chapter 6A. This is covered. All others are still not yet covered. So this is part related, especially for Part B, which relates to the investment. And secondly, one thing here is to remember that if a person has deposited the amount within this extended period, please don't claim that amount again in the next assessment year. So if you claim that amount in the next assessment year, subsequently it will be this call for this notices may come to you for concealment of in submitting the incorrect information, and the penalties may be levied. So that once that investment is claimed in a particular assessment year, it should not be claimed in a subsequent assessment year. Then in case of ATD, that is a person who is required to is claiming the deduction under Section 80D will have to respond to the various questions and answers. That is, few questions have been asked here, so you have to reply to that questions and accordingly fill up the other that is premium amount has to be entered accordingly. So whether any of your person is a senior citizen or not. So if it is a yes, whether you have paid the premium for that senior citizen, and if you have paid the premium for the senior citizen, you mention that amount, whatever the amount has been paid for that senior citizen, because there is a separate this extra amount is given as a deduction under chapter under this Section 80D. And secondly, if you have incurred any expenditure for preventive health checkup, there is an additional 5,000 rupees is available. So that has to be entered in the preventive checkup column, not and should not be sum of them entered into all the columns. This sum of them entered into one single column, so that you get the. So if you give the details correctly in the correct column, you are not going to get any default notices or any additional demands. So this is mandatory. Then in case of persons who are directors and who are holding shares in listed or unlisted company, they are required to file inform this. So if a person is a director, he has to inform what is the name of the company has been to be given, type of the company, that is whether that is company is a domestic company or a foreign company, the PAN number of that company has to be given, and whether the company shares are listed or unlisted, and the DIN number has to be given, because without DIN number directly it cannot be a director of the company, and directors are mandatorily required to file the return. So this is the mandatory requirement. Then those persons who are holding shares in unlisted company. So here the specific requirement there is unlisted itself. So unlisted may be a private limited company or it may be a public limited company which is not listed on the stock exchange. So here you have to give the name of the company. Again, whether it is a domestic or foreign company, PAN number of the company has to be given. And what are the shares and whether it is opening balance you have acquired during the year, if it is acquired during the year, what was the issue price and what was the price which you have paid, whether you have paid for premium or not. If you have sold the shares, then whether they have sold, what is the sale consideration, and accordingly your capital gains have been offered for this or not. So this is required, mandatory information is required to be given. So accordingly, when the PAN number is given or acquisition is given, automatically the cross check will be there. So if there has been, even if the shares have been purchased from any other person, this information is required to be given. And one question has come here that whether a company which is a listed company but it is a temporarily delisted, whether that details has to be mentioned or they will be covered as unlisted or not. According to me, it is not a unlisted company because it is just for some or other reason they have got delisted for non-payment. The reason has to be found out for what reason it has been delisted. So if it is delisted company and because of non-payment of stock exchanges fees or such type of other transactions, they are temporarily suspended or they are temporarily out of it. So that information is not required to be given over there. Then pass-through income, that is person who now what is happening, that is those who are having investment in business trust or investment fund, wherein now till last year this income was chargeable in the hands of the trust, and trust used to pass on this income to the investor and the investor would get that income tax free. But now this provision has been amended. Then now it says that this income will be chargeable in the hands of the investor, not in the hands of the trust. So if any person who is getting any investment, either positive income or a negative income, they have to fill up this part. They have to fill up this schedule mandatorily. So that any positive income or any negative income, whether is there, that is to be reported over here, and accordingly, what is your income and what is the income which is received from this trust, that will be clubbed and the tax will be computed accordingly. And accordingly, whatever if any TDS is deducted on any such income, then definitely that also has to be mentioned over in the TDS column, so that this income is computed correctly. And even if any carry forward loss which is there of the earlier years, so if it is a loss is transferred to from the earlier years, then whether this loss has to be mentioned, yes, definitely that loss is now to be claimed by the investor himself. So that so if it is related to house property loss or share capital loss or long-term capital loss, you just mention for which assessment year it belongs to, and accordingly the loss will be adjusted against if you have the income corresponding income, and whether it will be allowable under section 70 to 75 of the income tax act. So you have to just fill up this schedule. One question has come in there, this in pass-through income, that is I think I have to carry this clause is already covered. That is the clause. So if that loss will be carried forward in the hands of what it is stated that if the loss is more, then whether that loss is can be carried forward, yes, definitely it can be carried forward provided that the filing of the return was done in time on other provisions have been satisfied. Then those who are having income from life insurance business. So if you see that section 30 to section life insurance business, his income has to be computed in accordance with section 115B. And accordingly, one new section has been added in the computation of income. That is wherein you have to see what is the income from this insurance business that has to be reported, and whatever the additions or disallowance which has to be made, the additions or deductions on account of section 32, section 43 has to be done. That has to be reported, and whatever the final figure will be remaining, that will be chargeable to tax. And accordingly, if any intra-head set-off of the business loss has to be done, that also point has been added in the computation, where and it will be computing your income accordingly. So any income from business which is from LIC, etc., and this all has to be mentioned in the correct section and the correct clause, so that the computation can be generated correctly. Then coming to ITR 6, ITR 6 has many more information. The ITR 6 utility has not been released, but some of the information which I have got it from the ITR, there is first in case of managing director or director, secretary or principal officer who have held the office during the previous year, all the details has to be given. If the person who was a director for a specified period or not for that particular, here the information, name, designation, residential address, PAN number or Aadhaar number, DIN number has to be given. So this is mandatory. Then the particulars who are the beneficial holders of the shares, that is the persons. That is now in case the person may be holding the shares in on behalf of some trust or some, but then who is the actual beneficial owner? That person's name has to be given if it is exceeding 10%, and PAN number has to be given if the PAN is allotted to that person. And in case of unlisted company, particulars of natural persons, that is, see, it says that unlisted company particulars of natural persons who are ultimate beneficial holders, directly or indirectly, of shareholding are not less than 10% of the voting power. So this is again the biggest challenge this year, that NCA authorities have mandated that Band 1 and Band 2 form is required to be filed if the person is holding the shares in a beneficial capacity. So a beneficial as a beneficiary. So who are the ultimate owners of these shares? That person owner's name has to be given here. So be very specific and particular. So in case you have to just obtain the list of the shareholders who are there, and if the shareholders list has any such persons who are other than the natural persons, then you have to call for the details that who are the ultimate owners of the company, and that person's details has to be given. Then secondly, in case of foreign companies, is the details of the parent company also has to be given. That what is the parent, which is the parent company, and where it is assessed to tax, the country of the residence has to be given, and the taxpayer registration number. That is just like PAN number, they have unique identification number or a tax identification number which is given to them. So that has to be mentioned mandatorily. And in case of foreign company, who ultimate foreign company details also has to be given. So this is country of residence and it all is mandatory. So this is a specific or mandatory information in the ITR. So if you don't give these details correctly, and if subsequently it has been found out, though these details does not have any impact on any income of the person, but since these details belongs to the these details are required to be given because they have other implications which are linked with that ITM. Then about in non-current investments, you have to give the breakup. What are the equity instruments breakup has been asked separately. It is listed equities, unlisted equities has to be given. And this when unlisted equity has been mentioned over here, you have to see that you fill up that schedule of the schedule SI correctly. Then in bond, preference shares, etc., partnership loan. Then share application money, there has been additional report thing has been added. That is, what is the share application money is pending less than 1 year, pending more than 1 year. Because this type of transactions are under the radar, wherein the unaccounted money has been parked on. So if that is more than 1 year, definitely be prepared to face the consequences. And again, at the time of filing the audit report, ensure that any money which is outstanding for more than 60 days as the share application money is covered by the deposit. So deposit rules also get applied, and see that when you are signing the audit report, section 73 to 76 rules are also being complied on. Then deposit from the related parties, that is needs to be given separately in the balance sheet. Deposit from the related parties, what are covered under the related party, the legal instructions are given to them. So just follow up to this. Then in ITR 6, if a person, if the income is received by any company for investment which is made at the foreign company, then that is chargeable at the concessional rates. Ensure that you mention that in the schedule OS correctly. Schedule SH1, which relates to the share capital disclosure. So section 8 companies don't have this, the companies which are limited by guarantee, they don't have share capital as such. So that is, they have the members, so they are not required to fill up this schedule. But one more category has been exempted this year, that startups who are exempted from the levy of angel tax. That is, they satisfy the condition which is stated in the notification of the DPIP. That is, notification number is given to you. So if they satisfy the conditions and they are registered by with DPIIT, then they are not required to fill up the details. But provided they fill up the requisite information that they are registered with the DPIIT, and DPIIT registration number is given. So once you fill up that, the schedule SH1, if it is not filled up, then it won't ask for the information. Then verifier of the income tax returns now requires that that residential address of the person in case of ITR 6 there has to be given. Then DIN number is mandatory if the director has signed the return of income. The person is signing as a director, or the key managerial person if is having the DIN number. So this is mandatory information. Other changes in the field, that is income which is chargeable at a concession rate under on account of DTS. Please mention the requisite fill up that schedule DPA AA clause, and you have to fill up the details accordingly, which is what is the country under which clause of the DTA the income is chargeable. Foreign companies who are reporting income from royalty, they have or fees from technical services are chargeable at a concessional rate, so they have to fill up the schedule correctly. If any return is to be filed in response to the notice which is received from the income tax department, UDI number is mandatory. So without UDI number, you cannot file the return. So any notice which has come, which is paid relating to any previous year which is there, then you have to quote this number. Even if you have got a defective return notice also has the UDI number, and if you are responding to that notice, you have to mention that UDI number. And UDI number is generated by the portal. Manual written UDI number should not be accepted. Companies who are opting for alternate tax, now the biggest challenge here this year, the company will be having that which tax systems to adopt. And so if the company wants to adopt the alternate tax system, whether it falls within 15%, 22%, 25%, 30%, etc., they have to select. So a normal tax rate if they are accepting, then they are not required to worry about. But if they are selecting opting for this section 115BAA or section 115BAB, they are required to file form number 10 IC before filing the return of income. So this has to be filed on or before the due date of filing of the return of income. And without filing this, please don't file the return. Otherwise, you will not be getting the benefit of the concessional rate. Your processing will be done at the normal rate of tax. Then section 115BAB, AB says about taxing of units of the mutual fund which are purchased in the foreign state. They are chargeable to tax at a concessional rate. So you select that they report that the income is received from this type of funds under section 115B, and accordingly, so that the concessional rate of tax may apply. Then in case of builders and developers, that is the provision was amended wherein it says that where the project is completed, then whatever if the project is completed and 2 years are elapsed, and the builders and developers persons are holding the stock, then they have to offer the notional rent as a income from house property. So one change is here, it is said that if a person who has had the property, construction of the property is already completed, but that 2 years time limit has not been elapsed, they are also required to report the details under in the ITR 5 and ITR 6, and that should be reported as a self-occupied property. And once that 2 years time limit has elapsed, that notional rent has to be offered for taxation. Otherwise, the income may be at the time of scrutiny, the tax may be levied at a higher rate. Then reporting of disallowance, that is basically one mistake which has been found out, that 40B and 40BA. There's the reporting mistakes which are happening. That is for 40BA. This is any interest or remuneration which is paid to the members of association of persons that is not that cannot be claimed as expenses. So that should not be, when you are selecting the category as AOP, and see that this is not reported in 40B, it is reported in 40BA correctly. Then about income, that is import in the Excel utility. Now what has happened, that Excel pre-filled XML is now available. So you can download the pre-filled XML from the Income Tax Department's website. You log in with your user ID and password and download pre-filled XML. And this pre-filled XML can be opened in the Income Tax Department's utility, so that all the information which is gathered, which is there in the pre-filled XML, will automatically be captured in the Excel utility, and you will have to fill other details only. So this will be helpful for you, also the persons who are basically filing the returns using Excel utility. So the statistical information and details says that 85% people are filing income tax returns through this private software, and 15% returns are filed through pre-filled XML. But the data will come to the subsequent slide and see what are the changes which are affected. Then basically those who are covered by transfer pricing audit, and the transfer pricing audit report is received, and any qualification relating to any primary adjustment which is done by the transfer pricing auditor, this is mandatorily required to be filled where the transfer pricing audit is applicable. So any adjustment or any preliminary primary adjustment is made by the transfer pricing auditor, this has to be reported here. And what is the tax liability? That is, the tax liability is chargeable at the rate of 18% surcharge. Then how this liability is registered, that has to be reported in this particular clause. So this is mandatory for transfer pricing agent. ITR 7, there are so many changes. Since I am not into trust and I don't practice in trust, but whether I will be discussing just minimum requirements, that if it is a trust is carrying on any project, then that nature of whether that project is registered with the Income Tax Department or not, that has to be mentioned. Then re-registration is being made mandatory, that is from 1st of October to 31st of December, all the trust will be required to be re-registered, and that registration will be valid for a period of 5 years. So if the trust is, the due date as of now is 30th of November, and by 30th of November, if the person has got the registration, then the new registration trust details has to be mentioned. Secondly, any approval, that is, if any project which is registered under the income tax and approval has been obtained for this exemption for that project, then the details, the approval number, date of registration, and the approving authority details has to be mentioned over here. Then re-registration of trust, so that details all the trusts, whether they are registered earlier or not, all the trusts will have to re-register, and once they are re-registered, they have to give the new registration numbers over here. And then under which section the income is exempted for taxation, that has to be selected, and that has to be on. And all this procedure will be online. The necessary details will be available on the income tax portal by 30th of September. So it is going to start from 1st of October onwards. Then if in case of donation, which is a donation which is forming part of purpose, we will be required to give the extra disclosure. Disclosure requirements has been enhanced in such cases. Then 2 points, that is corpus donation, that is given to other trusts, which is now not exempted under section 11, so that has been removed. Section deduction under section 10AA has been removed from the computation of income. A new point, added point is about 115DD, wherein if a trust is dissolved or the trust is merged with any other trust, so whatever the assets which are lying that are chargeable at a maximum marginal rate. So whether you fall within that category or not, whether the tax is applicable or not, just ensure that, so if it is applicable, you pay the taxes and discharge the liability over here. Then bank account refund. Now you have to give two bank accounts. You can give two bank accounts for getting your income tax refund. So earlier it was one bank account. Now it is 2 bank accounts, but you have to ensure that whatever bank accounts you are giving it, this bank account should be pre-validated first on the income tax department website. And all the refunds which are pending till date, unless and until your bank account is pre-validated on the income tax website, you are not going to get the refund. So this is mandatory. Secondly, if a person is a foreign resident, so all bank accounts has to be given here, whatever were in operation during the period is required, but only which 2 bank accounts you want the refund, that the details has to be given, that has to be selected for online. Then so subsequently that same account where you want the refund, that same bank account has to be pre-validated on the income tax department website. So that should not, this should properly match. Secondly, if a person is a non-resident or a person wants a non-resident person or a person who is not an ordinary resident who is residing in the country and doesn't want that bank, this amount should come to this bank account in India. Then he can give the details of the foreign bank accounts. He has to give the SWIFT code number, name of the bank, country of the location, and IBAN number, so that the refund will be credited to that bank account. So now it is not required that for non-resident they should have the bank account here in India. They can have the bank account in the foreign country also, and the refund will be credited to that bank account. So any person who is having any foreign asset which is located outside India, even if he is a signatory in a bank account and he doesn't have any foreign interest, then also that Schedule FA is required to be filled up, because all these informations are mandatory information. Acknowledgement changes, that is now one, if you file the ITR and if you want, you see that if you don't want to e-verify at the time of filing, then you can do that subsequently. E-filing, e-verification can be done, provided you do it within that specified time. All the other than ITR 6, this benefit is available. ITR 6, this benefit is not available. ITR 6 has to be immediately e-verified at the time of filing, and that too mandatorily with the digital signature, not through other modes of e-verification. So now if you are not verifying the return, completing the verification proceedings at the time of filing the returns, acknowledgement will be generated, new acknowledgement will be generated, which is called as Indian Income Tax Return Verification Form, which doesn't have any details or information relating to your income or tax change. So this acknowledgement, all other modes of e-verification are eligible for this. So you have to complete the e-verification proceeding, then the new acknowledgement number will be generated. New acknowledgement will be generated, which is called as this is the new. I've given the comparison of old acknowledgement and new acknowledgement. Now if you see earlier, all the income and your tax payment details were clubbed in a single chain. Now all these informations are being subdivided. There is your income, your dividend distribution, tax paid, your this related to your accumulated losses, etc., etc. This is the new format of the ITR file. So this is for your reference purpose. And before filing the return of income, see that there are no notices which are appearing. So if any non-compliance is there, you just have to visit to the compliance portal. One thing I forgot to tell, that this year the changes has happened, that your date of e-verification will be treated as your date of filing. So if you as of now the due date is 30th of November, and if you file the return on 30th of November and subsequently you verify on 1st of December, the date will be treated as 1st of December onwards. 1st of December, and 1st of December will be treated as date of filing, and the return will be then if any late fee has to be levied or any other consequences related to this late filing, that will be applicable. So secondly, also one change has been made, that if you file the return which is belated, whether it is refund is also there, the interest will be given to you from the date of filing, date of completion of e-verification, and not from the date of that is from the 1st of April, where the interest is normally applicable. So these two changes have happened. Then while filing the return of income, ensure that first you verify the e-campaign which is there. That is the compliance. Go to the compliance portal and see that any such non-compliance is there. So in this, any notices which are issued by the income tax department, so that compliance is done or not, that is required to be done. So whether you agree with this transaction or you don't agree with the transaction, so that has to be ensured. If you don't agree with the transaction, you just file your response has to be filed. And e-campaign history can also be verified. So all the verifications can be done. Now there are validation and verification rules which have been entered. So there are three types of validation and verification rules which have been mandated in the ITR. So first is part A, is what it says that that if you don't fill up the information correctly wherever it is required in the particular clause, and whatever is required in the return of income, your XML won't be generated. So mandatory information is required to be filled up. If you don't fill up correctly, then your XML won't be generated. It won't allow you to file that XML is not generated. So if the XML is not generated, the return cannot be filed. Second type of error is that when it will allow you to generate the XML, but it says that this return is having a defect. That is, this return at the time of processing section 139.9 defect will be identified, and subsequently the data it will call you, ask you to file the rectification return subsequently. So I would request definitely that you don't file the such type of, you just verify the returns correctly or not, whether that information is correct, and then you file it, because 139.9 notice is definitely going to come in such type of major part. So if you instead of redoing the work again, doing it better that you file it in properly in the first instance, so that the return is uploaded and filed and the processing is being done successfully. And even the private software providers, that is those private providers, they have to register themselves with the income tax department, and any mistakes which is found out in their returns, so then the notices will be given to such software providers, and it will be ensured that if the mistakes are not corrected, or the quality of the data which they are providing in the ITR then is not to the fit within the parameters which is fixed by the CPC, then such type of license will be cancelled, and the person will not be, that software provider won't be allowed to generate the, that software utility cannot be generated from that, ITR utility cannot be generated from that software, and you will not be able to file the return. So this is basically related to valid and valid error. So now while filing the returns, there are several mistakes which are identified, that in case of computation of refund, computation of income, if it is found at what refund or whatever the demand you are expecting, if it is not correct, then please verify the details before submitting it, because if you find out any mistakes which is there in this, better you correct before the filing of the return of income, so that the information is being given correctly, and especially in case of salaried employees. So salaried employees, and the accurate and complete filling up of relevant columns and the details. So you have to fill up the return, and information has to be given in the relevant column, or the details in that particular ITR form is most correct and most crucial for correct calculation of income and correct calculation of income. So this is the requirement of the CPC. Then salaried persons, now what is happening, the person may be having salary from more than one employer. Then if that is not appearing in form 26, the persons are not declaring such type of this income, and subsequently when the notices are coming that this income has not been declared, and this has been done in many more cases. Though this particular area, gray area, has been covered in the 24Q, but at the 24Q that you have to report the income of earlier employee, or you have any other income, but some employee may not provide it. So it may not be binding on the company, but company should ensure that take the proper declarations from the employee that there are no other incomes and not. So the company cannot be held up for non-compliance or giving incorrect information. So interest income from fixed deposits, savings banks, etc., should be entered in the correct cell, because savings bank account deductions are associated with Chapter 6 deduction. So if you club the interest income and report in one clause, definitely the deductions may not be granted. So late filing, that is 271(1)(f), 27(f), that is late fee is applicable. Penal interest on 2, that is 1% on 234(1). This exemption rate is as of now, this extension has been given this year, that if the return is filed up to November and interest is this tax liability is less than 1 lakh, then the interest is not applicable. See that in 234A, whether that is applicable or not, that has to be checked. Losses will not be allowed to be carried forward. Deductions related to income under Chapter 6A won't be allowed. So these are the consequences of late filing. Various alternative mechanisms of e-verification. Everybody is aware that you can do it through other OTP is the best way, provided the mobile number is linked, but you can do it through bank account number. If it is bank account is pre-validated and sale is registered to DMAT, etc., to net banking, etc., everybody is much aware about it. So this verification has to can be done, but this verification is applicable to all returns except ITR 6 and ITR 7. That if it is filed by the political parties. So circular number 13 of 2020 has come, that is a one-time reduction has been given, that is those who have not completed e-verification for assessment year 15-16 to assessment year 19-20. One-time opportunity has been given that they can complete the e-verification by 30th of September. So you have 15 days. Those who have not completed the e-verification proceedings, they can complete it prior to before 30th of September, and the returns will be processed by 31st of December. But one change is there that income, the interest, if it is received, interest is refund is there. Interest will be given from the date of completion of e-verification proceedings, not from the date it is from the beginning of that corresponding assessment year. And when where this return of income has been removed from the system, then that person cannot take the benefit of this circular. For that purpose, the e-verification this separate link has been given on the Income Tax Department's website. Now coming to the new changes, I will take the question and answers in the last once I complete this. The new changes which are proposed, that now password for login will be your Aadhaar OTP. That is basically the linking of Aadhaar. When it is completed, Aadhaar password will be replaced with the Aadhaar. So to prevent the misuse of the login. So person whose user ID, this PAN number, they will come to know who has logged in. Then locking of the PAN. So as of now, this has not been implemented, but PAN will be locked if we enter the wrong PAN number, incorrect PAN number thrice, just like what is there on the TDS CPC portal. Then about expanding the capturing of information, that is pre-fill utility, we have already discussed about it. Validation of bank account is mandatory. So if your bank account is not pre-validated, you are not going to get the refund. Your refund will be rejected, and then you will have to raise a request for refund reissue. So better before filing the return, wherever, especially in case of where there is a refund, see that the validation, pre-validation is completed and the bank account is there till the refund is received. The real-time processing of return is going to come. We will be discussing in much in the other slides. That is, now it is said that UDI number that is any reports which is filed, any audit report which is filed by the chartered accountant, UDI number is mandatory. So this will be made effective from 1st of October 2020 onwards. So UDI is mandated. So when you file any audit report or any certificate, UDI number has to be filed. And those UDI, those 15 days time limit will be given if you have not generated the UDI. 15 days time limit, what is given in the income tax on the UDI website. Same way, 15 days time limit will be given to the auditor to update the UDI. And if this UDI is not updated within 15 days, the form will be removed from the system and it will be treated that the form is not been filed. Necessary guidelines will be issued by the institute in this regard. And if any person who wants to withdraw that form will not be allowed to withdraw, and if he wants to withdraw, then affidavit will be required to be given, and he has to mention that why he wants to withdraw the form, what mistake has happened, and why he wants to upload the form again. So this is again a challenging thing, challenge for it, because right now what is happening, any mistakes which is happening, the people were filing the revised report or the revised form, and then it was been so this will not be allowed to be removed, and this is what is proposed in CPC2. Then that is one of the taxpayers exemption, lots of pending law, that is whatever the notices or whatever come, when the taxpayer complies with that notice, the date of acceptance will be treated as date of filing, just like the date of e-verification is treated as date of filing in case of ITR. Same way, any notices which are received from the income tax department, whenever you submit that information, that will be treated as a date of acceptance, and that will, and accordingly necessary notice for fines and penalties will be issued. Then that is now simple example, that is a tax audit report is being filed. The tax audit report is now required to be accepted by the SSC. If the person is not accepting that form will be within that reasonable time, then that form will be removed from the system. That tax audit is not been filed. So here, why after filing the return audit report, it will ensure that the audit report is accepted by the SSC. Otherwise, this form will be removed from the system. So this is there. Then account validation failure, which is happening, especially in case of private cooperative banks. This account validation failure is there. Now, what is the reason? What is stated by CPC that these banks are not integrated and listed on the ITD portal. That is basically they have not installed the software there with the CPC, and they have not come up. So they have the cooperative, and especially they will have to update the software which should be in sync with the CPC. So these all software should be linked with the ITBA, and then only that this validation will be applicable for such type of one. CAs will now be covered as all CAs will be automatically covered as e-intermediaries. So now in the new CPC2, what they have planned is automatically all the CAs will be able to file the return of income through their user ID and password, that is ARC. That's now what the user ID and password we are using for this income tax return filing, this audit reports filing. Same user ID and password will be can be used by the CA for filing the return of income for the client. So provided they have authorized you to file, so they will have to get the PAN, that particular PAN number will have to authorize you to file the return of income. And once this return has been filed by you, automatically it is indirect certification by a chartered accountant that this information he has certified, he has gone from his office, and if any incorrect information comes, then CA will be liable for such thing, and even that extent should go through prosecution in case of any fraud or anything happens. Then notice under section 245, the 30 days time limit has been given and no response has been given, then the refund is being adjusted. So you have to give the response, any notices which come, the time limit is within 30 days. After 30 days, if you are responding, it will not be, the refund will be adjusted. Then non-operative bank account should not be pre-validated. So this is what is saying, that if the bank account is non-operative, it is already linked with the bank. So if your account is this non-operative, it will not allow you to pre-validate that bank account. Then processing will be on the real time, that is ITR1 to ITR1 and ITR4 immediately on filing it will be processed, and 143(1) intimation will be given, and any this refund of this that will be granted at the time of it. Virtual assistant, now with this virtual assistance and remote desktop for online grievances is going to come. So any grievances you want to log it, give it online, response will be given through artificial intelligence system which is adopted by the income tax department. Because the taxpayer department is now moving towards the taxpayer centric focus as per the government's guidelines, that is taxpayer charter has come. Mobile app will now be able, the income tax returns will be allowed to be filed from the mobile app directly. So that income tax department is coming up with the software to file the returns of income through mobile app also. Then pre-filled ITR for all the returns will be given the relevant, that is whatever the schedules which are applicable, that only schedules will be presented. So you don't have to go through all the full return 28, 30 pages, whatever the returns are there. So unwanted schedules won't come. If you go and on the first page, it will be given that if you want to add any schedule, that schedule you can ask for, and that schedule will be added. So slowly and gradually, your private software people will also be out from this. Because department is giving you all the information which is gathered through. Then batch processing of returns is being shifted to parallel processing. So there, what this processing will be through good speed. Right now, it takes almost the time is around 6 months when the returns are filed during the peak time, and 15 days when it is filed in the non-peak time. So this is going to be shifted, because what happens in batch processing, if 1 day or 2 returns are creating hurdle, the processing is not being done. So that will be kept inside, and the parallel processing will go, the speed will be increased. And all this information that is collected through various sources, data mining and data access will be given to the department. Chat box will come, Twitter and Facebooks for customer services will be, and this information will be shared with RPSC, and according to the scrutiny notice or assessment will be done. So what your information, what you do on your Twitter, Facebook, everything will be monitored and will be given for data mining, and the notices will be issued. Post-processing issues, there are some issues that is in case of scrutiny, AO will be given the powers, that is to withhold the refund till the assessment is completed. Necessary communication has to be done by the AO. So if any case is selected for scrutiny by assessing officer, the refund can be withheld. It has to inform to the CPC. Then ITS pending verification for claim, new items have been included, that is go through the return and check the claim if eligible, then communicate with the real. This is basically related to whenever any this processing pending verifications, any claims which are found to be pending verification, the notices will be given. You have to respond to the notice and give the details, and the returns will be processed. Basically, about ATTTA deductions, it has been stated that people are claiming ATTTA deduction. There is no income from the other sources. So this is what it is found. Partners information that is not filled up properly, then there are linked with revenue. And basically, when a filing ITR file, you have to give the information, that is all the partners details as well, and the share of profit percentage should add up to 100%, which is not being mentioned. Carry forward losses, errors are coming because of improper disclosure in the schedule CFL. Proper information has to be given. ICDS adjustment standard, wherein you are required whether if the tax audit is applicable, even if the tax audit is not applicable, then if any this addition has to be done on account of ICDS, that has to be given separately. This is mandatory for in the case of business income. Then tax credit variance basically is happening because of incorrect information or incorrect schedule which has been filled out. Now coming to the last leg of discussion, that is 26AS amendment has happened. Now new 26AS has come. That is, this shows that 26AS, that CBDT has notified a new annual information statement that is applicable from 1st of June, effective on 1st of June. Now it will give you the information that your PAN number, Aadhaar number, date of employment, email address, etc. will be given. So any information, if you want to modify or you want to correct it, ensure that this is corrected, because all your communication will be done through the address and the details of which are available on the Income Tax Department's website. So your mobile number, your address and email address is definitely much more important, because communication is going to come through digital mode on this email ID. And in many cases, it is found that people are giving chartered accountants email ID and chartered accountants mobile number. Please try to avoid such things and trouble from the department. And if any department, these numbers or any details have to be changed, you have to file form number 49A with the NSDL and get this information corrected. Now, part B, you had certain information related to your tax deducted, your tax payment, your income tax refund. This has been now expanded, the scope has been expanded, that now it will give you the specified transaction, financial transaction, that is SFT statement, that is will be given. Your income tax demand and refund status will be available in 26AS. Your pending proceedings related to income tax, your completed proceedings to income related to income tax will be available. And this form will be, this 26AS is the real-time updation. Every 3 months, this will get updated once the details are filed by the subsequent details or information are available on the department's website by the due to online filing. Now, scope of reporting, that is SFT statement, has been expanded. The due date, the date implementation date has not yet been given, but now it says that if any education institution has received any fees for any child which is above ₹1 lakh, they will be required to file SFT statement. Electricity companies have been told that any person who is spending is more than 1 lakh, then that person's details has to be given. The persons, that is for travel agents who have booked the tickets for business class for air travel, either business class for travel or foreign travel, business class travel in case of domestic traveling, and foreign travel, they have to file SFT statement. Then hotels who are receiving payment above ₹20,000, they have to file the SFT. Purchasing, that is white goods, that is jewelry, paintings, marbles, etc., exceeding 1 lakh, they are covered by SFT. Deposits or credits in the current account. So those assessees who have deposit transactions in the or credits in the current account which is exceeding ₹50 lakhs, they will be required to file. And for banks, that is current account for 50 lakhs, savings account 25 lakhs, bank account, this bank lockers, all this information are to be given through SFT. Payment of property tax, that is BMC who is receiving the property tax exceeding ₹20,000 per annum from any person, the SBMC has to inform to the Income Tax Department. LIC or such the life insurance premium where the payment is above ₹50,000, which is given, which is received by the such insurance company, they have to file the SFT statement. In case of health insurance or mediclaim, such type of persons, 20,000 is the limit. Above 20,000 any premium is received, then they have to file the SFT statement. Share market transactions, that is brokers will have to file demat, give the details of the demat accounts, bank lockers, everything has to be, this has to be filed. Now, one more category is added where the person has not submitted the PAN number and he has entered into a high value transaction. their details also has to be given. So if you say that I'm not going to give the PAN number while this PAN, then definitely you will be covered by this, because either PAN or Aadhaar, both has to be given. So if the person is not taking a PAN or Aadhaar, that person will be held liable. And the category, this basically from this compulsory filing of return of income by all the professionals, then the persons who are having this done transaction exceeding rupees 30 lakhs in the bank account, they will be covered in the short time. Or the businessman person who is having a turnover above rupees 50 lakhs, or the person who has made the payment of rent exceeding rupees 40,000 rupees, they will be covered in the e-filing. So this is the scope of reporting for SFT statement. The due date, the date is not yet notified, but soon it will be notified and it will be covered. So avoid last days. Don't come file on the returns on the last day, because it is seen. Because when we had a meeting with the CPC has shown us many tax audit reports wherein the XML is of some other person and the attachments is of some other person. So the department has not taken any such action yet, but definitely chartered accountants are responsible, and don't blindly rely on the staff to file the returns, because ultimately it is the principals this liability that is, they have to ensure that if the returns filed are correct before uploading the return. Sufficient and accurate backup is available for the future requirements, because you never know, say any type of pandemic or any type of contingencies may happen. And it is basically ensure that you have one backup which is outside the office. And you can take the services of cloud also. The institute has tied up with cloud service provider. They are giving at a reasonable reasonable amount of services are given, so that if any incontinences happen in subsequent future, you can restore the data. And now the relying blindly on the system is not suggested. And any unwanted data, or any workings which are there in the system should be deleted for two reasons. That is, the processing becomes slow, and what additional information which you never come to know that which information is final information. And when you want to submit this information, when the department raises any query or scrutiny, you may file certain unwanted information and may land up that person or the assessor into trouble. So return developed generated by private software should not be considered blindly accurate and final. Validation utilities provided by the income tax department is much or more control oriented. Basically, you have to ensure you use the income tax department's utility. Even if you have this generated XML through private software, you can rerun that utility and you can import that that XML into the department's utility, and you can verify whether that is correct or not, because department's utility are 99.9999% confirmed and final. It is a 143(1) assessment order which you are going to receive once you click on the pre-calculate line. So those who can override the utilities, who can change the utilities, please don't try to do the same, because when you are filing the return now on the income tax department website, you are dealing with two IT, the Income Tax Act and the IT Information Technology Act. And doing any tampering of data is liable for penalty under the Income Tax Information Technology Act also. You may not get that much money from that SSC, and you will end up in the trouble. And for such type of thing, I would also require this. My suggestion is that you should take a professional indemnity insurance. Our income tax the institute has tied up with several service providers. They can give you this the high coverage with a lesser premium. So that is mandated for, so any such inconveniences happen in future, so that you are covered by this type of premium that the insurance company can compensate you with the losses. And 143(1) assessment, that is any mismatch, if it is found, first notices will be given to the SSC, and the SSC has to accept or reject. So if it is rejection is there, the reason for the rejection has to be given. And if any undisclosed income or unaccounted income has been found out during the course of assessment, then any expenses subsequently, if you tell that these expenses are required to be claimed against such income, no such expenses will be allowed. So that will be chargeable at the maximum marginal rate, and penalties will be noted. And any chartered accountants who is doing any activities or any filings on the income tax department website, now the complaints will be taken, complaints will be raised against us if any mistakes are being found, and they will be reported to the action can be done. And if you see, the chartered accountants are very soft targets, and they are being unwanted or warranted being penalized for doing such good work with them. So because of this, now ministry, even the government is behind the chartered accountant. So it is our core prime duty that we should ensure that we are safeguarded properly. So any order, any penalty order, if some is passed by any assessing officer under section 271(1)(g), wherein the powers has been given to the assessing officer to penalize the chartered accountant. The powers are with the assessing officer. They can pass this penalty proceedings can be done by the assessing officer. So in that case, the chartered accountants have the option to appeal to the ITAT, but definitely the credibility of that person is being socially and financially, that the person's credibility is at the task. So see that such type of things do not happen. E-proceeding is now extended to all type of scrutiny assessment. There will be no physical interaction with any person. So so any default, if it is there in punishing AIR information, also ensure that the AIR information or any details which is to be punished, that should be punished by the SSC itself instead of the chartered accountants. Department is also facing the some issues, that is non-filers are increasing. That's almost around 2 crores people has been identified between that. Days people have stopped filing the return of income. Whatever may be the source, one of the source may be that the person may have expired, or the person may have not left the country and you may not be having a taxable income. Inside that case, it should basically, you should inform to the department that why you are not filing the return of income. If the person has expired, then the PAN number has to be surrendered once all the pending formalities are being completed. And periodical review of exemptions, deductions, natural calamities, all are one of the reasons why these filers are reduced. But this type of when this is identified by the person department that these non-filers, there's almost around 2 crore non-filer department is after that why they have stopped filing the returns. And if any willful evaders are identified, prosecutions will be taken, action will be taken. Now it says that stringent action will be there on the non-filers. That is section 80 AC says that no deductions will be allowed under section 80 to H2 RRB, that is related to the income related deduction. Then prosecutions will be there. That is prosecution that provides imprisonment up to 2 years in case a person does not file the return of income and the tax liability has been found out. But one exemption has been given, that if the tax liability is below 3,000 rupees in case of individuals other than companies, then this can be the concession can be, exemption can be, for prosecution can be given. But companies, even if a single rupee has been found as payable and the company has not paid the tax, then definitely the action will be taken. Then the basic purpose here is to prevent the abuse of this exemption on the basis of the amount by tax level by the shell companies or the companies who are holding the dynamic. As of now, the department is not taking any action. The department has taken action where the amount is exceeding rupees 10 lakhs. In such cases, the actions have been started and taken. But the department, see, the amount what is there is 3,000 is very small amount. And tomorrow the department, because since the this provision says up to 3,000 rupees, this can be misused also. Chances are there. So please be very specific and be very particular. Coming to that one point, I was told that you covered this species on sale of goods. I think I will take last. I have time, right? So I think last 5 minutes I'll cover this. That is 061H is been made implemented with effect from 1st of October 2020 onwards. Now what it says that a person who is a seller, now seller who receives any amount. Now you see that it says receives any amount as a consideration for sale of any goods of the value in aggregate of rupees 50 lakhs in any previous year, other than the goods which has been exported out of there. So export is out of the purview, import export is out of the purview. The person's turnover should be 10 crores in the previous year. So if the person's turnover is there with 10 crore in the previous year and he has sold the goods exceeding rupees 50 lakhs, then he is liable to deduct this charge TCS at the rate of 0.1%, and that should be also on the amount which is received, not on the sale. So when he receives the amount at that time, the 0.1% has to be collected and has to be given. And if the person from whom he is receiving the money, he has not submitted the PAN number, then that rate from 0.1% the tax has to be deducted at the rate of 1%. Now that 25% what is relaxation has been given, this is applicable for this provision also. So that provision, this 0.01% will become 0.075 and 1% will become 0.75. And now it says that the buyer, if the buyer is liable to deduct the tax under any other provisions. And one more exemption here is given that if this this transaction is covered by any other provision of the tax, TDS or TCS, then this won't apply. That is in case of scrap sales or sub sales, there TCS is required to be deducted. That is alcohol dealer, that is leaves dealers, etc. They are required to deduct TCS. So they are not covered by this 206C1H. Then if the buyer is liable to deduct TDS under any other provision, then it is not, this is not applicable. Now buyer means what? Buyer means any person who purchases any goods. That is, if you are selling the goods and the buyer, if it is a central government, state government or a government in government authorities, then they are exempted. Local audit, that is which is given in the explanation, that is section 1020, they are also exempted. And the person who are importing the goods out of India, then the person importing goods into India or any of the person as the central government may notify in the official gazette the exemption will be given to such type of persons subsequently. Now, who is the seller? Seller, it says that the person whose total sales, gross receipts or turnover from the business carried on by him exceeded 10 crore rupees during the immediately preceding financial year in which the sale of goods is carried out. Not being a person who is the central government or any other person who is notified in the official gazette. Gazette. So this is basically the provisions. Now, it is also stated that if any difficulty arises, then the government will issue the guidelines in future in related to this. And every guidelines will be issued will be laid before the House of Parliament and shall be binding on the income tax authorities and all the persons who are liable to collect such sum. Tax is to be collected at the time of receipt of money of the sale, receipt of the sale consideration from the buyer, and not at the time of entering into the sales transaction. So this has to be so even if you have sold the goods which is you have received any money for any sale of goods which is prior to 1st of October, then also you are required to collect the TCS. So that is mandatory, and it will be relevant as to whether the amount of 50 lakhs purchase is relevant, whether the amount of the sales purchase is made in 1 year or the sales purchase number of earlier year. Transaction of import or export are out of the scope of TCS to purchase of all goods. Was what was stated in the finance bill. It was that the specified goods list will be issued. But at the time of now, finally, when the final budget has been issued, it says that it covers all type of transactions, all purchases of all goods, not related to specified goods. Then there is no clarity which has been given. That is whether the GST will be a part of sales or not, and whether the benefit of that notification circular number 7650 of 2018, which says that TDS tax is not to be required to be deducted on GST and all. So whether there will be will come to the rescue is also a question. Clarification is required to be received from the department. This is leading to enormous additional procedural burden on TCS, because what is happening? Already the persons are covered by TDS, they are covered by TCS, they are covered by GST and all. And lot of representation was being made by the institute and also other institute forums, but it has not been considered. The government has not considered it, and this provision is becoming effective from 1st of October onwards. Any help you require on the income tax department, you can just use the call center number. The call center numbers are dedicated. That is for income tax related queries. That is 1800, and refund you have a separate call center numbers definitely. Future here is that if new utilities are there, you have to be online. Days have come for faceless assessment. You will not be able to see the person who is doing your assessment. I think you can have a special for faceless assessment. You can have a separate sessions on this. But one of the reasons is that any unreconciled transaction which is there in 26 AS will be a challenge. You have to verify. And while filing this year's return of income, one declaration you have to give. That is, you have verified the pre-filled utility and all the transactions which are appearing in the pre-filled utility has been considered while filing the return of income. So be very particular, specific while filing the returns of income and see that you file it correctly. Any unwarranted transaction is appearing in form number 26 AS. You have to ensure that you bring it to the notice of the CPC that this transaction does not pertain to you. You can raise the e-Nivaran. E-Nivaran option is available. Both the e-Nivaran can be raised to TDS CPC also, and you can raise to the income tax CPC also that this transaction does not pertain to you. So that will come to your rescue. CPC is the data center of all the information, and the information is collected from the SSC. You cannot deny it. It is a preserver of information. Data given by the SSC will be preserved from the lifetime, whether the SSC is available or not. So this is there. Friends, I have tried to cover whatever best possible was there with me. And you might not have liked something, you have liked something. And if you find any mistakes in this presentation, please bring it to my notice so that I can correct it subsequently. And but this is the future, because you cannot do today's job with yesterday's methods for the tomorrow's business. You have to accept the system, and if you don't accept it, you will be out of the system. So let us, if any mistakes have happened, let us correct the mistakes in time. I think I have tried my level best to cover everything possible, and I have, if anything has been forgotten by me, please forgive me for that. And thank you all the participants for your patience hearing, and all especially my Boryoli Study Circle, for giving me this opportunity to deal with this subject properly. I think I have almost around 38 questions, right?
Yeah, Avinash bhai,
One question, sir.
Ravi will read the questions for you.
I can take it upstairs. Now I will read it. I can take it up. Not an issue with me. Okay.
Okay.
Comfortable, fine, no?
Yes, it is fine. You can.
Yeah.
So individual have taxable income of 40 lakhs and exempt income of whether liable to file ITR once. Please go through that provision. What is there? I have given it in the presentation specifically what is there, when it is required to be filed, when it is not required to be filed. Please go through that. Then ISIN code for second question is from this SFT needs to be disclosed in the ITR. ITR SFT, you don't need to disclose SFT in the ITR. It is basically, it is the transaction available in 26 AS, and how you disclose is that you have to mention. And one thing here, that is when you are filling up scheduled TDS, what you are claiming it, under which head of income you have disclosed that income. The income, please select that, so that at the time of processing, it will be cross-matching, because what is happening in some cases, a bank interest is there which is taxable under the head business or profession. And when you select it, if you don't select as a business or profession, you select as you don't keep it blank, it will take it as income from other sources. So the nature where this income has been disclosed, in which schedule it has been disclosed correctly, that has to be specified. ISIN code for long-term capital gains, I think it is available on the NBSC website. You can just download it from the NSC website. You just type on Google, it will there. What if the turnover is more than 2 crores and less than 5 crores? What about 44 AD? It will be applicable. First of all, say 242 that 5%, the 6% and 8% profit criteria is not applicable for the person who are having turnover between 2 crores to 5 crores. It is below 2 crores, and if you are covered by the 44 AD provision, and whether you are individual, HUF or a partnership firm, in that case only 44 AD applies. 44 AD does not apply to LLP and companies. Then another question is that is my cash receipts are 4% of the total receipts and cash payments are 5.5%. So net, now say it is either of cash receipts or cash payment. If any one is exceeding 5 lakhs, you are covered. You will be covered by tax audit. You cannot claim the benefit of that. Exemption benefit cannot be given. Whether ISIN detail has to be given date wise, or we can summarize the entire year. No. You will have to give single entry, and for each security you have to give it separate. So give it. You cannot just aggregate it and put it, because aggregating and putting it also will create a problem to you, and the notices are going to come. Now, another question is that, for example, say turnover is below the normal tax audit limit. There are mixed opinions that a business cannot claim and file loss. According to me, see, positive income, positive, if there is a loss, it is there, then you are not covered by the tax audit, provided you satisfy other clause, because many decisions are there by the court that if negative income is not treated as profit, so you can take the benefit. Not for non-life insurance, no, not for non-life. That is, it is only that 115B is applicable for life insurance, these are not for non-life insurance. Reporting of shares by all income tax returns. Reporting of all shares, it is not all shares, it is of shares which are held by unlisted equity. That is to be required, it is to be filed all the income tax return filers. So if they are holding a person who is holding the shares in the unlisted equity, you have to declare it. It is mandatory. For capital gains, script-wise details compulsory to be shown in the ITR or like AY. No, you have to show script-wise details. ISIN has to be given. Basically, for short-term capital gains, you can just go through that because wherein that option is available. This is basically for tracking this penny stocks and such type of stocks, millions which is happening. This is just for the government's verification that any huge profit is not claimed as a long-term capital gains and is not tax evasion is not happening. Then question from this one 44 AD, if any SS is having, I think we have already covered that. If TDS returns are not filed by FD companies for interest, and I think manufacturing partnership already in existence now converted into private limited company can claim concessional rate of tax now under section. See, basically, what is the private limited company when it is going to file the return of income, you will just verify whether that company falls within that criteria or not. So, if the company is filing the return, definitely partnership from up to that return, your partnership from return will go, and when it is converted into private limited company, your income will be treated from that date. So, that has to be verified accordingly. Then, if TDS returns are not filed by FD companies for interest and TDS, and then need to be considered though not reflected. If you are having the company stand number, you can just mention the company stand number over there, and you can claim the TDS. So there are various case laws which are available. So the amount where till the tax is deducted to that extent, the amount won't be recovered from you to that extent. Other amount you have to pay it, so that you can enter it in Form 26. Even if it is not appearing in 26 years, you can claim it in scheduled scheduled TDS. And subsequently, when the company deposits it, the credit will be granted to you, and you can get it. Then SSC having a business turnover is less than 10 crores, that is up to 15 Jan. He died in 16 January on 16, business was transferred to his legal, and that is his wife. Turnover during 16th Jan to 31st March 80 lakhs. Net profit is less than 6%. Audit is applicable. Yes, audit is applicable provided that 44 in 44 AD it is there. Then also SSC being a director in many companies holding shares, also in his personal investment in shares. See, basically holding shares and upon debt transfer to shares to his wife legal, and whether to show under the sale consideration. No, it is transfer. It is when the person shares is transferred, it is considered as transmissions of sale, and whatever will be the cost which was there by the cost of acquisition by that person, that will be treated as cost of acquisition. You can show it as that. Then interest on the 34A late filing interest would be levied if tax liability exceeds 1 lakh. Yes, definitely. Excessive paid old tax amount 31st October that up to the date of payment that it will be applicable. How as a CA can verify all data are being shared to us? It is there any link? No, there is no such link. You have to take a declaration. It is just a management representation letter. MRL has to be taken, and you have to take that whatever the information has been received is perfect or not. And better always try to take the declarations at that I don't have any such bank account other than this, I have no income other than this. This type of declarations can be taken. And then is this applicable to what is applicable to all this? This question is not clear. Mr. Rahul Shah can just raise another query. Then return filed on 30th of November 2020 and validate and verified on the what? Yes, it will be treated as a late return. It will be treated as a late return. Any return which is verified after the due date will be treated as a late return, and penalty other provisions will be applicable. Then donations given, when it will be reflected in the when will it will be reflected in the e-filing of government department? This government department only can answer this question. I cannot answer this question because when donations automatically is being kept track of, so definitely will appear, but I don't know where it will appear. So I'm not the right person to answer this question. TCS is only on the sale consideration or on consideration including on GST. I think we have already that whether it is on GST, it will be applicable or not. That is again requires a clarification from the department. In the actions of clarification, definitely you have to take. My view is that you have to take the full amount. Someone holds the shares in unlisted company. What is it required to? Yes, even a single share of 1 rupee, if it is held, it is required to be declared. If there are more than one employer, income is less than 50 lakhs, whether ITR 1 or 2, please go through these provisions properly and just go through this ITR 1, which I have shared to you in the presentation will be shared to you, or this information is given in that return. Or while generating XML, we are getting IFSC code error or PNC bank account. See, basically, please don't, I would request you don't use any cooperative banks IFSI code error, because these bank softwares are not linked with IDA, ITDA, and your returns will be rejected, their refund will be rejected. And these people are, I think I have already covered this issue, because they have to update their software as per the IPDB, and if they are not updating, don't use that IFSC code. Otherwise, IFSC code will be invalid. If the turnover is 1.90 crores and after adding GST turnover is more than 2 crores, audit is compulsory. Please go through the provisions of this. Read the turnover definition. Our guidance note of the institute is there on the tax audit. Refer to that, wherein the definition has been given. So according to me, if it is exclusive method which is followed, then tax audit may not be inclusive and exclusive method both are there. So just follow which method you are following and take decision accordingly. If engineer is carrying on professional services as well as trading activity for parts. So just you have to ensure that for the trading activity and professional activity, both are the separate activity. You have to club the turnover. If the professional services income is exceeding rupees 50 lakhs, then it will be liable. And for professional part, he will be required to report the profit at the rate of 50% if the turnover is below 50 lakhs. Otherwise, he will be liable for tax audit on that professional service. He cannot claim he can claim the benefit of 44AD only on the trading activity, not on the professional service. For non-resident individual directorship and unlisted company shares, only Indian companies to be reported or outside India to be reported. That is basically for non-resident individual, only Indian companies has to be reported, because that is for that. It is only for Indian market. In capital gains, expenses include brokerage, GST, STT. Yes, expenses includes all this definitely. ISIN wine details are to be filled up for I think this is already covered for loss of profit for all transactions. In case of housing society return, ITR, we get the deductions, ATP2, all interest received, cooperative banks. Now this utility has been modified. That is ITR 5 has been updated day before yesterday. So this problem will be sorted out. That is, you have to select the cooperative society and then it will allow you that deduction. If the utility is updated, this is taken care of in the new utility. Please go through this new utility ITR 5 and it will allow you. Sir, all income tax returns filers have to declare listed. I think only unlisted shares, very old holdings, cost not available. Unlisted shares only you have to declare. Unlisted, you can definitely take it from the company. A person has filed a return of income and stated bank accounts in ITR. Here, he has to get a registration of the bank, because this question is not clear. Mr. Rajendra Mehta, this question is not clear. A person has filed return of income and stated bank account in ITR. He has to get the registration of bank details? What is it? Is actually it should be pre-validation. Registration.
It should be pre-validation, I think so.
Pre-validation has to be done on the bank. Aadhaar is linked to the PAN, but Aadhaar is not getting the OTP. What is the option? If it is linked to the PAN, just see that Aadhaar OTP is not coming. Contact the Aadhaar center, and you can do the other modes of e-verification which is there. So bank account also can be done. Other modes are very applicable. In capital gains, you have to disclose all the shares wise transaction. This is already covered. You have to disclose full tax wise or transaction, all transactions. Any chances of extension? Chances we have from the institute part, we have made a representation. From chamber also we have made a representation. Chances are bright, but don't wait on this, because you never know. Sir, turnover less than 1 crore, net profit also less than 6 crore. Whether tax audit is applicable? Yes, it is applicable. SFT needs to be disclosed. I think it is already covered. This is already covered in our earlier question. I think I have tried to cover most of the questions which are there. Any issues that is there or not, you can take it up. I think I have given proper justice to the subject and when well-deserved time. I think I have completed my presentation in within the given time.
Sir, Vijay sir, can I ask something?
Yeah, you can ask a question.
Avinash sir, 2 points. One, there was a question that the return has been filed on 30th November, but validated on 15th December. I think you get 120 days time for verification.
No, that is basically that 120 days time is given for verification. It is given, but date of the filing will be treated when you verify it. So even if you have sent this 120 days limit is not applicable on the last day. So they have taken this has been discussed with CPC. It will be treated as a late return filing from this assessment year.
Okay, fine. The second thing, where everyone is receiving notice for that compliance portal. For example, it's a live example. I have received one notice for a compliance portal for financial year 1920.
Yeah.
1920, for example, the client is having only rent income. So the rent income is, for example, 10 lakh rupees for the whole, 12 lakh rupees for the whole year.
Okay.
In fact, it is showing in that compliance that the following rent has been received for 9 lakh rupees. Only 9 lakh rupees, because they have considered only 9 months 26 AS. And the option you get it is either information is correct, either information is not fully correct. Now we should say yes or yes. We should say
information is not fully correct.
Okay, but then we should
file the return. In that case, you have filed the return. If you file the return, you file the return. You do not worry about it. If you have not filed the return, file the return. Time limit is there till 30th of September, because assessment year 1920, 30th September up to 30th October, you can file the return. So
okay,
so file the return if it is required to be.
At the time your 26 AS get updated, we should wait for that.
No, don't wait for 26 AS updated. You just file the return. 26 AS can may get updated. You claim full TDS and file the return.
Okay. And second problem is that the same information they are showing 2 times. As per GSTR 1, rent 10 lakhs. As per house property, rent 10 lakhs.
So you just tell that this information is duplicate, not acceptable. The information is duplicate.
You don't have anything to write. They have given only 2 options, either fully correct or not correct.
Not correct. Select one of, in one you select not correct.
But in fact, as per GSTR 1, it is correct, and as per that also it is correct.
So then that is this is basically now they have started verification of returns to cross verification has started. So if the information is correct, you just file the return. Both of these things will be removed.
Okay. And last but not least, just to sum up, sir, if my turnover is 1 crore 90 lakhs,
yeah,
and profit is 6 lakhs, audit is applicable.
Yes.
If my turnover is
one profit is 6 lakhs.
6 lakhs. Turnover is 1 crore 90 lakhs.
1 crore 90 lakhs. You see whether then you have to split it into what is the cash part and what is the digital.
Cash part is 0. Sorry, cash part is 0.
Yes, sir. Into 6%, it comes to I think 1.90 into 6% comes to 11 lakhs 40,000, right? So tax audit is applicable.
Okay, 1 crore 90 lakhs, profit 6 lakhs, audit applicable. Turnover 4 crores, profit 6 lakhs, then audit not applicable.
But if you have provided your transaction, cash transactions are not applicable.
Cash transaction is 0.
Yes, cash transaction is 0, then tax audit is not applicable.
So this is not a lacuna that up to 2 crores everything is applicable, and 2 to 5 nothing.
Basically, it is just one of the reasons. The reason is that to we professionals are complaining that we are having lots of tax audit to be done, and so they have made the limit to up to 5 crore. That is basically 2 crore is for the person who doesn't have to maintain the books of accounts and all. So if your turnover is below 2 crore, then you that 44 AA provision is being diluted. And for 2 crores to 5 crore, 44 AA diluted provision is not applicable in such case.
So you want to say that 1 crore 90 lakhs comes under audit, but 4 crores doesn't come under audit.
Yes. Okay. This is what the law says.
Okay. And a private limited professional firm.
Turnover
less than turnover 60 lakhs. Whether audit applicable or not?
Audit applicable because 50 lakh tax audit is applicable.
Private limited, the limit is there is no such limit for professional firm.
No, professional firm and the companies that audit is applicable, but tax audit will be applicable if it is exceeding 50 lakhs.
Thank you, sir.
Okay. And then that 50% criteria is not applicable to that also professional firm.
Yeah, right. Vijay sir, you can continue, sir. Thank you.
Yeah. Thank you, Avinash Bhai, for taking this session. There are certain announcements. The next meeting is scheduled on this coming Saturday on 19th. It's a hot topic only, issues under the tax audit. Then on 26th of September, as members know that for the quarter ended September, they have to compulsory complete 2 hours CP on the code of ethics. So we have kept a topic on what are the professional research we can carry out under the new code of ethics. That is on 26th September. The timing is 5 to 7. Now coming to the pleasant task of proposing a well-deserved vote of thanks to our speaker, Avinash Bhai. We are indeed thankful to you for taking this session in a more effective and efficient manner. You have covered various topics like changes in ITR 1 to ITR 7. What are the changes made in 26 AS? What are the extension for the scope for reporting? What are the due dates? Some useful tips you had given. We are indeed thankful for you for accepting our invitation. Your presentation was very nice. We had answered all the queries raised by the members. So on behalf of Borivali Central CP Study Circle, I propose a well-deserved vote of thanks and request all the members to carry out with a loud applause. Thank you.
It is my pleasure always. Thank you all. Thank you very much.
Yeah. Thank you, members. Thank you.